Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, the AI revolution will be a boon for natural gas, says fossil fuel bosses, as well as that Iran accuses Israel of killing general in strike on Damascus consulate. We've got lots to talk about in the charts. Also, lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, though, make sure to subscribe. The first article to talk about is on this topic of AI and fossil fuels. Now, oil producers are now saying that the demand for electricity driven by data centers will create a new boom for the natural gas market. This comes as the demand for electricity to power an artificial intelligence revolution is expected to rise, and thus have a knock-on effect into the natural gas market. Now, this is, of course, a very important article to talk about, largely because it's combining two topics which are of great interest to us. Of course, we've been covering the AI revolution kind of in a great deal of detail recently, and we've kind of persistently been going over it just simply because it's affecting markets so much at the moment. With whether that be within the US equity scene, where we're seeing, of course, the likes of Nvidia rise to new all-time highs and push the US equity indexes to new all-time highs as well as a result of this kind of AI hype. Or we're also talking about the negative side of that hype, like in yesterday's market briefing, where we did note, of course, how certain figures within the AI industry are, of course, warning that the current hype entering the AI industry is similar to that we saw with crypto, of course. And with crypto, of course, we know the kind of boom and bust cycle, which creates a great deal of instability and volatility, which some AI bosses are very wary of course. So we've definitely been covering the AI revolution and topics on AI extensively, just simply because of how essential and important it is to understand during this modern age and modern development of this kind of revolutionary technology, which some are kind of calling, which some are saying is creating this kind of market bubble, and some are saying will basically revolutionize the world and markets around us. And then, of course, this article then brings back and relates to the topic of fossil fuels, and more importantly, or more specifically, the topic of natural gas, which, whilst we may not cover, in as much extent as other topics, ultimately we often put a great deal of time into the topic of oil and natural gas and other kind of sorts of commodities, ultimately because not only does our world rely on it ultimately at the end of the day, but also it's a very interesting market which, of course, we follow and cover every single day on the charts. And we frequently come towards and talk about the price of Brent crude oil and even natural gas, as it's just one of those essential commodities, and people feel the real effects of the price of oil or natural gas changing on a daily basis, whether it's powering your home or whether it's filling up your car. So that's why we are constantly keeping our eyes on these commodities, which are, of course, essential to human life, it seems, for the moment. And what we're seeing here is kind of these two topics coming into kind of this period of not necessarily conflict, but where we are seeing one affect the other quite greatly. And this is kind of a topic of will AI require a great deal of power, and if so, where's that power going to come from? We already know with crypto, a great deal of controversy has basically been around crypto and the power that basically these crypto mining centers and other crypto farms kind of require power wise. And often that power, where's it coming from? Well, it's coming from the fossil fuel industry. So what is crypto basically? Well, we're kind of creating this digitalized currency, which in fact is damaging the environment greatly. So that was kind of the key controversy around fossil fuels and AI and crypto, pardon me. So I think that was a very interesting topic. And since yesterday we covered the crypto-like hype, which is now moving into AI, I think it's kind of an interesting topic to return to and highlight, simply because here the key message is that basically the AI revolution is going to demand a great deal of fossil fuels, which is going to impact the environment greatly, of course. So I think this is certainly a very interesting article to note, and a very important one to kind of understand, as we are kind of in this era now within the markets, within the world, just generally, where whether it be government officials or chief executives of companies are basically trying to make their products or their companies or nations more sustainable, use more renewable energy, and basically have a cleaner carbon footprint, or footprint in general on the environment. So I think this is a very, very interesting topic, and I think it's certainly an article which will help us understand the potential of natural gas's price, as well as the effects of AI on the rest of the world. So we'll get straight into it. Now, AI's soaring energy needs is being expected to rise be well beyond, what renewable energies and batteries could deliver, and thus making fossil fuel supplies ever more crucial. That is the key words which are coming out of these fossil fuel bosses' mouths. Now, the chief executive of the US's biggest gas producer, EQT, said that the AI boom will not be done without gas. The increase in customers for energy via gas was evident during the tech sector boom. Fossil fuel executives are now saying that renewables will not be reliable providers of their own for energy-hungry data centers. These comments come at a time where the US government is offering new incentives to clean energy providers in an effort to decarbonize the electricity grid. The executives saying that gas is essential to them essentially the only cost-efficient energy generation which is capable of providing the 24/7 reliable power required by the big technology companies to power the AI boom. This strong bullish outlook on fossil fuels comes amid a period of weak natural gas prices as producers look to find new sources of demand. And whilst this is a very important article, we will therefore be looking at natural gas's price at the end on the chart, so make sure you stay around to see that. But once again, a very important article and a very important topic to understand. Definitely keep your eyes on it. The next article to talk about, though, is on the topic of Iran and Israel. Now, three of the senior members of Iran's Revolutionary Guards were killed in an airstrike yesterday. This attack struck a consular section of Iran's embassy in Damascus, and since Iran has blamed the attack on Israel. Now, this, of course, is not the first time that we've spoken about Iran nor Israel, and we've been covering, of course, the Israel-Hamas war since the October the 7th massacre in great detail as well, covering the effects on markets as well as the humanitarian impact. And we know that since that October the 7th massacre, and since the operation by the IDF into the Gaza Strip, we've seen a great deal of kind of regional skirmishes between forces, as well as the regional tensions rising immensely. Pre-war, of course, as we highlighted in yesterday's market briefing, we noted that Saudi Arabia was on a very significant and very direct path, basically, to establishing normalization kind of agreements and ties with Israel, which was a key goal of Israel, of course. Since, of course, though, October the 7th massacre, and the fallout from that conflict and continuing conflict, ultimately we've seen the relations of these Arab powers and Israel strain greatly. And the key powers, of course, which have always had the most poor relations with Israel and the most hostile relations with Israel is, of course, Iran, and arguably now Iraq and Syria, with their kind of proxy networks led by Iran existing within those two destabilized nations. So that is the key situation that's been facing Israel since October the 7th, and we've known that groups like Hamas, of course, have received a great deal of funding from the Iranian proxy group network, along with Hamas, also Hezbollah, which of course is based in Lebanon but also has links within Syria. Those kind of that organization, of course, has been active in skirmishes with Israel, and we know that Israel does have plans to eradicate that organization in the same fashion that Israel is attempting to eradicate Hamas, which would of course entail an invasion likely into Lebanon. And we also know, of course, that the likes of the Houthis in Yemen, which have been attacking cargo vessels and merchant vessel ships within the Red Sea and Gulf of Aden, is of course also funded by that kind of Iranian proxy network. So certainly Iran has been very much involved in these attacks on Israel, and also attacks on the US bases within Iraq, Syria, and also Jordan, where of course we did see a drone strike killing numerous US military members, and that was of course done by one of these Shia militia groups funded by Iran, and this took place in Jordan. So most certainly regional tensions have been at an all-time high, and the conflict is now starting to almost spread across the region in many different ways. And the worry of course is that maybe Israel and Iran may somehow come into contact with one another in a direct conflict, which of course will have dire consequences on the region of the Arabian Peninsula. And that's been a key issue and a key topic of concern within the oil markets, and that's why we've kind of constantly been talking about it, because ultimately, should a regional conflict break out, oil's price is likely to skyrocket, of course, as we do know that the likes of Saudi Arabia and others within the area ultimately are key exporters of oil across the world. And cutting off that supply in a conflict where Saudi Arabia or Kuwait or Iraq or others are involved will of course damage oil supply greatly, and therefore cause prices to skyrocket to levels that we even noted of $150 a barrel, which is an extraordinary level for oil prices. So certainly this is a dire situation, and this attack could certainly make the situation very much worse. With this attack and death of 3 significant officials marking a significant escalation, with tensions being at a multi-year high within the region following the October the 7th massacre. Since October the 7th, the region has faced a range of differing attacks and skirmishes, with the Iranian-backed militia network called the Axis of Resistance fighting Israel, as well as attacking US forces and bases across the Middle East. Despite the attacks, however, Iranian and US relations have calmed recently after relations between the two powers fell to a low after a drone attack on a US base in Jordan. And whilst Iran wants to avoid a direct conflict, yesterday's strike could force their hand in a real conflict. So far, Israel has not confirmed involvement, and Iran has not yet commented on the strike. But the attacks marks the 4th suspected Israeli attack on Iranian forces in Syria this year. So certainly a very interesting topic to note, and a very important article to kind of note down and keep in your mind, as this could certainly affect oil's prices greatly as we get onto the charts. But also, a regional conflict is the key issue here and the key worry. So definitely keep your eyes on the topic. That's all to talk about in the charts, though. That's all to talk about in the articles, of course, though. Next to talk about, though, is the charts. We do have a great deal happening to start off the week, where we are of course reviewing yesterday's price action on Monday. And to begin with, we are of course talking about US equities, more importantly of course the US indice of the US 30, the Dow Jones, which of course has had a great deal of kind of price volatility recently, and very interesting movements which have taken place. Now, of course, in yesterday's market briefing, we were starting off the week, we were noting where prices were at, and we were noting where prices could of course go. And in yesterday's market briefing, the levels for the US 30's price was of course sitting just below this key area of liquidity, having tapped into it ending off last week. So we did note that the kind of possibilities were either that price would then continue to the downside after kind of forming this double top up here, or of course whether price could then break above this level, break and hook back on itself to once again come into contact with this liquidity zone, find that bullish liquidity, and then continue higher. So those were the kind of key areas that we were noting that price may come into contact with to start off the new week. But as you can see here, a great deal of volatility has entered the markets to start off the week, and a great deal of price action can be noted, with firstly price selling off insanely on the US 30, as we can see here, price dropping after breaking actually above this liquidity zone to start off the week. Price then dropped dramatically to the downside and is now reaching levels not seen since Tuesday last week. So basically reclaiming all of those gains that we did see off the back of last week's retracement, where price did make its way down to that 50% Fibonacci level and key liquidity zone, and then move higher from that area. So certainly price is in a very interesting level after now selling off from that area. The question is now whether price will now kind of form a ranging motion after coming into contact with this liquidity zone once again, or in fact will price now continue lower, break below this liquidity zone, and find new lows back around this old ranging area that we saw back in mid-March. So definitely keep your eyes on US equities, and more importantly the Dow Jones. Next to talk about though is the dollar, which has pushed higher to start off the week, pardon my nose, which has pushed higher to start of the week and has now entered this key liquidity zone and level that we've noted many months back, actually back in November, where price did make this as the kind of range low, this new lower low, when price was kind of starting to trend lower after ranging for some time at these prior highs. So certainly this is a very key area for price, and kind of marks the dollar's levels kind of returning to levels not seen, of course, since November, and kind of once again returning. If it does break above this liquidity zone, it will mark the dollar returning back to this old period of ranging, which kind of marked not much action for the dollar. And since then we've seen price move around greatly, trend to the downside to begin with, then move to the upside, then retrace on itself, and now is starting to move back to the upside. And as you can see here on these daily candles, we can see that price is now also coming into contact with this liquidity zone that we've already noted as a previous all-time low, but also this has been an area of an all-time high really for the dollar back in February. So certainly this area will have a great deal of resistance, a great deal of kind of bearish liquidity, and so the question is, of course, whether price can break above that, or will now price sell off from this area and make a kind of retracement before a continuation higher. So definitely keep your eyes on the dollar. Very interesting position at the moment, and sometimes it's important to zoom out to gain that contextual understanding of where the markets are going. Next to talk about though is Euro USD, which is sold off and is now continuing to the downside, actually breaking into this area of liquidity that we've noted before as a key area which prices reacted from on the euro, and this is since price has broken below this area of liquidity that was acting as a strong area of bullish support last week, but after coming into contact with that 38.20 liquidity zone, of course, price is now sold off from that area and is now pushing to the downside after breaking below that liquidity zone. Price has now finally reached this liquidity area, and the question is, of course, well, will price now kind of hook back on itself once more after reaching this area, which is likely to have a great deal of bullish orders, or in fact will we just continue to see a drop as a great deal of bearish momentum is maintained within the market. So definitely keep your eyes on Euro USD. It's a very volatile start to the week, most definitely in markets. Next to talk about though is pound yen, which of course has been consolidating recently, and with a lack of data that we've been getting for the pound and the yen to start of the week, we were expecting not much movement, and we've not seen as much movement as maybe we've seen in the dollar, euro, or US equities, but certainly price has made a move, with price breaking out of this kind of range that we were seeing form for the pound yen, and now we've seen price kind of drop below this range low and is now kind of back on the move to the downside. The question is whether this is just finishing a retracement. Quite possibly, we've noted that this 78.60 Fibonacci retracement level and liquidity zone is a key area where a great deal of bullish liquidity will be held. So the question is, of course, whether price will now make its way down to that level, react to that area of liquidity, and then continue higher. As pound yen has been very bullish recently, and that's a bit and the fundamental news and data in regards to the Bank of Japan and Bank of England has added to this situation. Next to talk about though is Bitcoin. Bitcoin, of course, has been very volatile recently, and to start off the week, price did spike down into this area of liquidity once again. What's seemingly forming is kind of this area of this kind of range that's forming on the charts between the 71,200 and 69,000 really, or maybe 68.5. So certainly a very interesting zone that price is kind of moving around in, where price is struggling to decide whether we should continue to the downside after coming into contact with this 78.60 key Fibonacci level, or in fact we should now continue higher after retracing back onto this key area of liquidity and bullish momentum and bullish liquidity, which is just below the $70,000 Bitcoin level. So definitely keep your eyes on Bitcoin. Quickly to cover though, gold, which has kind of pushed higher recently, and to start off the week has kind of retraced and is now maybe on the move back again higher. And lastly to talk about, of course, is oil, which is just continuing to push higher. Prices are moving very, very much higher, and this is arguably as a result of firstly that first article that we spoke about in regards to the AI revolution and the need of fossil fuels, but also the regional tensions within the Arab Peninsula with this Israeli strikes into Syria, killing Iranian generals. So definitely keep your eyes on those topics, as that's affecting oil's price greatly. And lastly, of course, natural gas, which is also on the rise after that first article. That's all to talk about in the charts though. Lastly to talk about quickly is the economic calendar, where we are getting a great deal of data. Not that important data, but there's some very important data nonetheless. Firstly, we're getting the RBA's meeting minutes, followed by the British housing prices figure and mortgage approvals data, followed by the Swiss retail sales figure and manufacturing figure, followed by a great deal of manufacturing figures from the Eurozone, Britain, Germany, France, Italy and Spain, where we're all getting the manufacturing figure. And then most importantly from the day, we're getting the German inflation rate figure, very important to understand Eurozone future monetary policy. And then finally the US factory orders and numerous Fed officials speeches. That's all to talk about on the economic calendar though. We've covered lots in the articles, lots in the charts and lots on the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later.